Very, very excited for the next presentation. I'm not going to lie. I've wanted Vibe on the stage for a while. Mark Waldron, CEO, is here to deliver. Please give him a warm welcome, Mark.
All right.
Off to it, man.
Thanks, man. Appreciate it. All right. Everyone, nice to be here. I want to thank Benzinga and Patrick and Elliot and the team for doing such a great job. Nice to see the energy back at these conferences, and I just really appreciate the opportunity. Now, just go back to here. You'll see our slogan is, it's always 420 at Vibe, and I see we've got the 420 slot, so I just want to thank Benzinga for somehow arranging that. I don't know how he pulled that off, but it was some sort of fortune-telling thing or something. So anyways, so we'll just move on. It's going to be a short presentation, talk a little bit about our public small cap company and what we're doing in the California marketplace. So I'll review the disclaimer language in the presentation towards the end, but hopefully I don't forget to do that. That having been said, talk a little bit about Vibe. We're a CSE-listed cannabis company operating almost exclusively in California. We have one store in Oregon. Apart from that, all of our assets, 6 retail locations and 3 cultivation assets, a manufacturing license and a distribution license, they're all located in California. It's a market we know, it's a market we love. We hear sometimes why California, and sometimes we hear why California. Well, we actually think it's a place where we can thrive and make money. And we're pretty psyched to be there. So our origins were pretty small. We bought 2 retail locations in California and used that as a plank to go public back in 2019. The revenues of those 2 stores were only $6.5 million. We expect to do a little under $40 million this year in our assets. So I think we've grown and bootstrapped this thing quite nicely on, quite frankly, quite minimal capital and no debt. So we like where we are, and I think we really like where we're poised going forward. So it's a term that's used a lot, maybe overused, but it really is, sometimes a cliche is there because it's useful. We're a vertically integrated company, and we think vertical integration in California in particular is critical. We don't think it's an easy place to operate retail stores on a standalone basis and make money. We think it's a hard place to be a farmer and make money. We think the combination of owning the vertical channel, that is cultivation, premium, indoor, greenhouse cultivation, flowing that through our stores, having our own distribution assets, having delivery, having a really nice online platform, that's all part of us curating our Vibe brand. So vertical integration is a term that we're going to repeat because we think it is the one path forward to make money in California in sort of the most low-risk profile way. So that's why we're in California, because it's a large market, it's fragmented, we know that. We know a lot of the operators are undercapitalized, but there are not that many truly vertically integrated platforms out there. We're one of them. I think that's one reason why we're actually making money as a public company, and most people are struggling to generate free cash flow out in Cali. So the fragmented nature, the culture of the place, the size of the market, the great agricultural assets that are available to the extent that you can build the infrastructure around them, and again, the ability to expand that vertical integration plank. It's why we're there, and it's why we're really happy to be there. So the highlights of Vibe: 1, we've been profitable for the last couple of quarters, even on an after-tax cash flow basis. We're actually generating cash as a company. I alluded to the fact that we'd bootstrapped this thing up from 2019. We've only done 2 equity raises, one $8 million US, the other one $13 million US. So we've only expended $21 million capital, and frankly, our balance sheet still has $7 million of cash on it. So we've actually been really frugal in getting to 7-store count and 3 cultivation assets. So we're profitable. I think next year is going to be a much more profitable year. And what I love about where we're poised is our growth potential. So we don't have to do further acquisitions to actually grow the coming year. We expect not just our retail stores, but the cultivation yields that are coming out of our 3 assets. Those are going to flow through our stores and through third-party sales and marketing channels. And I think next year we can truly say that EBITDA and revenues are going to be significantly higher, but without further M&A activity. Now, of course, we want to get to not 7 stores, but we want to have 12 stores by mid next year. We think there's an opportunity to do that. I think there are a lot of distressed retail operators, so we're keeping our eyes open. We're very active in new license applications and development. So I think the growth potential is there. And lastly, I think we've got a really good leadership team. Some of us have known each other for many, many years in other business ventures, but basically, whether it's M&A, retail experience, capital markets, or real estate, I think we've got a really good team that kind of hits on all the things we need to do to keep growing this thing in Cali. So not really to keep banging home the point too much about vertical integration, but when we talk about that, we're talking about increasing our retail platform as much as we can profitably so that about 50% of the flower and yield from our cultivation assets flow through our own stores. That's really our target. Beyond that, we've expanded our sales and marketing team to really not dump product in the wholesale markets, but actually sell branded Vibe product to other channels. But that vertical integration, it's the most key part of us being a profitable company out there. So well, I guess we'll keep harping on it, but that's really the Vibe in California story. Move on a little bit, talk about the numbers. So as you can see from a fairly modest 2020, 24 million revenues, we're going to do a tad under 40 million this year, our current year forecast. Next year, how do we hit 61 million on a calendar year basis, or even 69 million on a full run rate basis? Well, that's based on the current assets that we have. We have a significant cultivation property in Monterey County. We have expanded our Sacramento Cannabis campus from 5,000 square feet to 20,000 square feet. And we've got a really nice Crescent City greenhouse cultivation asset as well. Now, Monterey County, I'll touch on a little bit more, but basically it's a 250,000 square foot greenhouse development site that we've already hit the go button on. We acquired it this summer. Took a long time to do diligence on that. It was all about whether or not we had adequate power to that site to really energize it and make it a premium indoor grow, albeit in a greenhouse footprint. So our first phase of expansion there is 65,000 square feet. Again, it's underway, but that's part of that 2022 forecast. That asset is going to come on by mid next year. We have the Sacramento indoor expansion occurring this Q4 of this year. So these forecast numbers, we actually feel pretty confident about. This is not based on M&A, it's what we have in-house. So that's where we're at. A little hard to read this slide. Nevertheless, this is a detailed map of our retail locations. Just point out that Ukiah and Salinas, those are 2 stores that are built and ready to go. However, we expect they'll be open sometime in Q4. They're not quite open yet. So that's 7 stores, cultivation sites. And then I just want to talk a little bit about our distribution asset in Santa Rosa. It's actually been, since we acquired it a year ago, it's been an accretive acquisition for us just because the actual tax synergies of actually having that in Santa Rosa has been very significant and actually boosted our overall gross margins as a company. So our cultivation footprint and why this is so important. We don't think we can just be a standalone retail operator in California. Flower cultivation output is absolutely critical, and it's the premium indoor niche that we're focused on. We've heard a lot of horror stories of the last few months about commodity price deflation in California and wholesale prices collapsing. Again, a lot of that's outdoor flower. But if you look at the premium segment of the market, the indoor, that's where you want to be. That's where the margins are. And I actually think it's fairly protected. Even though people are trying to get into the premium indoor space, frankly, the power constraints on so many sites in California, PG&E is actually really overwhelmed with requests to energize sites. It's not there. So when you read these press releases about companies expanding their indoor footprint, really large numbers, always ask this follow-up question: is there power to the site? Because that's really the key determinant. So what we're looking to do here is get up to about 105,000 square feet of cultivation by mid next year, and I think that's really feasible. I think that's in our bailiwick. Online represents between 25 and 29% of revenues right now. I think we did a really good job of rolling this out during the height of COVID. A lot of that would be revenues that would be missed by the company if we hadn't packaged this online service as well as we did. So we're really happy with online. I think we can increase that to even 40%. It's something we focus on a lot. We've expanded our marketing team, our social media team, as well as our brand management, and that's part of the online experience. So we like where that's trending. There was a brand panel earlier this afternoon, and Mary Ellen, our brand expert, she spoke at that. She's a new hire to Vibe with an amazing background in brand management. While there's quite a bit of energy being put into brand management in the cannabis space, we think image is not branding. That's part of the overall brand package, but again, image plus quality plus the deliverable, what is actually the outlet for that product. I think that's part of the quality control channel that we're focused on. So when we talk about the Vibe brand, it's our own cultivation, it's our retail stores, and it's our image, but it can't be one of those. So there are companies that have products. I wouldn't call that a brand. I think the vertical channel is really what our brand is. You see some of the nice imagery that we've come up with, and we're rolling out over the next couple of months. So I'll just move forward a little bit here, as time is a little short. I touched on the Monterey cultivation site, really critical to the future growth of the company on an EBITDA and revenue basis. 254,000 square foot site. Our first phase of expansion is 65,000 square feet, and that will be online by June of next year. It's energized for that first phase. We still have to put in a cogen solution for phases 2 and 3, the other 180,000 square feet. But when we look at this in its entirety, the Monterey site is a 70 to 80 million revenue and 35, 40 million EBITDA asset. Really important for the future of the company. Likewise, expansion of Sacramento indoor cannabis from 5,000 square feet to 20,000 square feet. What's exciting is what we're actually doing inside in our existing facilities. We've been achieving 36, 37% THC in our flower. We're excited about that, and I think that's why the premium segment is where we want to be. That's where we're going to stay, and that's really where the margins are in California. So I don't think people should get too anxious about where commodity prices are going in California if they're looking at people who are indoor growers and committed to quality. We have a greenhouse site up in Crescent City, a little under 20,000 square feet. Even as what I would call a moderately low-tech greenhouse site, we're actually getting THC levels of 26 to 28%. Right? So the right curated techniques can actually make a demonstrable difference in your output. As a result, our margins are actually good with our output there. A little summary of our corporate information, ticker symbol VIBE. I think we're trading at some pretty low multiples. The forecast for 2021, it's kind of getting baked in as we're already into October. We're trading at about a 5.7 multiple of forecast for 2021. When we look next year, I said before that I thought our forecast was pretty conservative given that we actually own and control those assets. Well, you can see our projections are for EBITDA EV to EBITDA multiples, or EBITDA to EV multiples of under 2. We don't have much debt on the balance sheet. We have about $1.5 million of long-term debt. We might incur about $2 million of new debt as part of our cultivation expansion. That having been said, we have over $7 million of cash on the balance sheet. So really, we're a very under-levered company. Pretty clean cap structure, not a lot of bells and whistles. I think we're kind of a value play. Talked about the leadership team before. Again, Joe and Mike, my colleagues and partners, we've been in business together for over 12 years, so we work really well together. So in summary, vertical integration in California, focus on the totality of integration for our brand, the Vibe brand, and I think that's really where the margins are. That's the way to not be outcompeted at the retail level or at the wholesale level, is to create that holistic brand. That's what we are, and I think it's going to be a good next couple of years for us, especially as we should be significantly cash flow positive next year. So the all-important legal disclaimers here, these pages, I'm sure you can read that all. I whizzed through this because it's late in the day, and it's a corporate presentation, but it's a California theme. People have questions about vertical integration and profitability out there, so maybe this is a way to open things up and ask questions along those lines.
I love that idea, and I see one. Let's go.
So two great questions. So in terms of national brand, no, just because we're so obsessive about quality control, the only way for us to actually truly quality control it is for us to curate that, to actually grow it, to actually manage the entire chain. So no, we're probably not going to partner nationally on our brand. We're going to stay focused in California. Are we going to expand beyond Cali? Apart from the store in Oregon, which is a little bit of a historical fluke why we even have it, to be honest with you. It's not part of our strategic plan. We actually do have, you know, a pending license in Massachusetts. But just to kind of run through those numbers, you know, the commodity prices in Massachusetts are much higher in California, but the cost base is much higher. So if we run the numbers in Cali, in premium product, if our cost basis is $300 to $400 a pound, but we could realize between $1,200 and $1,400 a pound selling it, that's a pretty good margin on a percentage basis. Massachusetts, maybe you get our projections were maybe $2,700 a pound over the next couple of years and falling really quickly, but your costs are really high. And you're kind of betting all in. So if we looked at an indoor expansion in Massachusetts, $15 million for 50,000 square foot grow, double tiered, all right, you're all in on that. You spend $15 million on the entire Monterey project that we have underway. If we did that, that would be phases 1, 2, and 3. The payback on that $15 million is a year at worst. So the payback cycle in California is actually really good as long as your costs are low. If you don't have a lot of burdensome debt, if you haven't bought a site that's a build to suit or something like that. So it's really all, I think cost management is really key out there. And that's why we love premium greenhouse grows out there, because you can phase things in. And if you feel like you're getting a little too far over your skis, you can rein in your growth a little bit. So
fantastic. How about a couple minutes, last thoughts for Vibe?
Last thoughts. I kind of put it out.
How about this?
There.
One last question. Anybody else have a question for Mark before?
If not, I'll talk about one more thing, which is the regulatory burden in California. It's significant. We try to look at things as a glass half full. So the regulatory burden actually to us is a bit of a competitive weapon. It stops people from coming into certain areas. Everyone knows how difficult it is to open up there, so it keeps some people out. It also makes it hard for some people who are undercapitalized to thrive. So I think that, while we're looking to expand our retail footprint, distressed assets are very much on our radar, and I think that's because of the burden out there. So I think we can actually craft an opportunity for what is a fairly burdensome regulatory regime out there.
Fantastic. Everybody, Mark Waldron, CEO of Vibe Growth 420 at 420. We do it here for you at Benzinga. Thanks so much, Mark. Appreciate you.